Hey, welcome back. It's JWalter here. I hope you guys have an awesome day. In today's housing market update, I'm going to be sharing a new report from Redfin that was actually just published yesterday at the time of this video. In this report, they stated that housing supply, or the number of houses for sale in the US, has continued to increase, yet home buyers are backing out of this housing market. On top of that, home sellers are dropping their asking prices in greater numbers. And with that said, let's go ahead and dive right into the video because I have a lot to share with you guys today. So again, this is according to Redfin. This was published on the 9th of June. It says inventory climbs as buyers are backing out. More sellers are dropping their asking prices in response because we're seeing more inventory hit the market, yet home buyers are pulling back, and therefore more home sellers are dropping their asking prices in order to attract a home buyer. On top of that, the share of listings with a price reduction is approaching a record high. So it says here the number of houses for sale in the US fell 8% during the 4 weeks ending June 5th, the most recent data we have for you guys. This is the smallest year-over-year decline since January 2020. This is a key factor here because even though we have less inventory now compared to last year, the difference between 2021 and this year has been declining. So at the beginning of this year, we were down approximately 20% in the number of houses for sale compared to the first week of 2021. Now it's only 8%. So we're narrowing that gap, which is obviously a positive sign. However, though, it says this is more of a reflection of declining home buyer demand than of more houses being listed for sale. So in other words, we're seeing home buyer demand decrease, and that's causing housing inventory to increase. So that makes sense because we're seeing less home buying demand. Therefore, homes that do get listed for sale are going to be sitting on the market longer. Therefore, housing supply is going to be increasing because of that. However, we're not seeing a big increase of housing supply from new listings though, and more on that here in just a little bit. Also, Redfin's home buying demand index fell 12% last week. That's a measure of home tours and offers and other requests for help with home buying services. Meanwhile, new listings actually fell 2% during the 4-week period compared to 1 year ago, and 21% of home sellers dropped their asking prices. This is the second highest share on record going back through 2015. And according to Redfin's deputy chief economist, he said the following: sellers are losing control of this housing market as homes that are overpriced and or less desirable are increasingly having price reductions and taking longer to sell. I'm actually seeing this in my marketplace as well. As you guys all know, I'm a real estate agent in Sacramento. I actually drove by a house the other day that was listed for sale a few weeks ago, and it actually had a new rider or a new sign above the for sale sign that said new price. This house was listed for sale for, I believe, like $1.4 million. And they actually reduced the price in order to attract a home buyer. And this is because home buying demand is decreasing, yet in Sacramento, we're seeing a big increase in the number of new listings hitting the market. In other words, we have an increase of over 50% of active listings right now compared to 1 year ago. And also actually, frankly, compared to 1 month ago as well, a big increase in the number of houses listed for sale in Sacramento in May. In any case, he goes on to say the following here in this report here. Although demand is easing across the United States on average, every housing market's different, some home buyers may jump back into the market when price growth loses steam and rates continue to stabilize. I definitely want to touch on this because rates were stabilizing towards the last half of May and also in the early parts of June. However, though, mortgage rates have been increasing greatly over the past few days. So for example, according to Investopedia.com, as of today, which is June 10th, the average 30-year fix is at 5.72%. If you want to refi, that rate's going to be a little bit higher at 5.96%. And by the way, the rates you see on Investopedia and also the Mortgage News Daily are those for people who have excellent credit. So for example, according to Investopedia.com, these rates that they publish on their website are for people with a loan to value ratio of 80%. In other words, they have a 20% equity in their houses, or they're putting 20% down in order to buy a house. Also with an average FICO score in the range of 700 to 760, and also paying no mortgage points. So this current rate of 5.72% is a big increase compared to 1 year ago, and actually compared to the beginning of this year. At the beginning of this year, rates were around 3.3%. So basically in 6 months or less than 6 months, we went from 3.3% now almost to 5.8%. And here's a really good chart to share with you guys regarding how crazy high mortgage rates have been increasing in such a short period of time. So as you can see here, really ever since the beginning of this year, mortgage rates have been increasing greatly. Rates right now, again, at 5.72% according to Investopedia.com. And if we go back to November 2008, that was the last time rates were above 5.7%. And rates actually increased greatly today. And this is because inflation numbers were actually released today as well for May. It says here on CNBC's website here, inflation hit a 40-year high and consumer sentiment plummets, and the Dow Jones Industrial Average shed 816 points or 2.5%. The S&P 500 fell 2.8%, while the Nasdaq absolutely tanked at 3.5% at the time of this video. So here's what happened this morning. The May Consumer Price Index report was actually released this morning. It came in at its highest level since 1981. The report showed prices rising 8.6% year over year, and the street was expecting an increase by only 8.3%. So therefore, the stock market and also the bond market is very volatile right now because the inflation readings were higher than expected. And according to an article that was published today by the Mortgage News Daily, it says this is a troubling development. Traders and economists were both expecting, or at least hoping, for inflation to continue showing signs of cooling. This is because April's reading of inflation was slightly lower than the previous month. However, May's inflation data came in higher than expected and also reaching a 40-year high. It says here, while the core level reading is flat month over month, headline inflation surged back to 1% month over month, its second highest monthly level since this pandemic and the third highest since the 1980s. And because of this high inflation reading that we just got, the yield on the 10-year U.S. Treasury note has spiked to 3.15% at the time of this video, the highest levels since November of 2018. And this, of course, is one of the main reasons why mortgage rates increased greatly today, because mortgage rates are tied loosely to the 10-year U.S. Treasury note, or the yield on it. Also, what I noticed as well, according to investing.com on their Fed rate monitor tool, have a look at this. Here's their forecast for what the Fed is going to be doing regarding the federal funds rate in 4 days from now, or basically in 5 days from now, which meets on June 15th. The street was forecasting for the Fed to increase the federal funds rate by 50 basis points. Yesterday, actually, the probability of that was 91.3%. But today, that current probability actually declined to 81.9% because the street is now forecasting by 18% probability that the Fed is going to be increasing rates by 75 basis points. So again, yesterday, they were calling for a 91% probability that the Fed is going to be increasing rates by 50 basis points and an 8.7% probability that they're going to be increasing rates by 75 basis points. But today that actually went up to 18.1%. I'll definitely keep you posted regarding that because it's going to be very interesting to see, is the Fed going to be reacting to this May's inflation data report that's stating that inflation is at very high levels and they're going to be therefore increasing rates more than they previously planned. If they actually do that and increase rates by 75 basis points, that's going to cause a lot of volatility in the bond market and therefore a lot of volatility in the mortgage market as well. In any case, let's go back to the report here, but I definitely wanted to bring that to your attention though, because rates are not necessarily stabilizing. That's basically old news. Over the past several days, mortgage rates have been increasing greatly, and especially today because of this big inflation reading that we just received. So in any case, here's some leading indicators of home buying activity according to Redfin. As I've been reporting to you guys, fewer people are searching for houses for sale on Google. When going onto Google Trends, you can see search results for people looking for houses for sale. That's down 10% from 1 year ago. Also, the seasonally adjusted Redfin Home Buying Demand Index fell 12% year over year during the week ending June 5th. This was the 8th consecutive week of declines and also the second highest share on record going back to 2015. What we're also seeing right now is touring activity by real estate agents showing houses to their home buyers has been declining compared to 1 year ago. So if you click on this link here, it takes you to this website here. As I've been sharing with you guys over the past several months here, this is showingtime.com, and this is for data through June 9th of this year. Real estate agent showings are actually up 5.8% compared to the first week of January of this year, compared to a 32.6% increase this week last year compared to the first week in 2021. Therefore, this year compared to last year, we're down approximately 27 percentage points in the number of home showings across North America. Also, as it's been important to you guys, the number of mortgage purchase applications for mortgage loans has also been declining as well. It actually fell 21% compared to 1 year ago, according to the Mortgage Bankers Association. Here's a graphic to show you purchase application numbers from now compared to basically the late 1990s. The current levels right now are at the lowest levels since April 2020, but also very near levels we saw in 2010 through 2016. And also at the current levels for the number of people submitting loan applications for home purchases, it's far below the levels we saw in 2017, really, through the early parts of 2022. And this is another indication that home buying demand is decreasing because of rising home prices and, of course, rising mortgage rates. So comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.